We start with the biggest loser. Gold mining in South Africa has been losing its shine for a while, and Anglogold Ashanti, the third largest gold miner, plunged on the market today after it said it now had approval to split its assets. Now that means a new company in South Africa containing the local mines and a separate listing for non-local mines in London. It follows a trend whereby South African miners are selling or unbundling their local assets. This could be seen as a sign of a lack of confidence in South Africa in the face of power supply and labour issues, a form of isolating the South African assets so they can't affect the rest of the company. Anglogold will have to raise money through a rights offer, which points to its precarious position. Gold miners in South Africa are deep and hard to extract from, and many are unprofitable at the current gold price. On the line from Port Elizabeth is Sipho Pityana, the non-executive chair of Anglogold Ashanti. Thank you for joining us, Mr. Pityana. Firstly, what does a split mean for investors? Technically, I would think they now could invest in two assets, but there is so much unhappiness today.
Well, thank you very much for giving me the opportunity to clarify this, because this is a very different proposition. What we're doing is to create two platforms. One is to take advantage of the international business that we have created over a period of time, remembering that the South African business will continue to own 65% of the international business going forward. So what we have created in business that we call the international business will be listed separately in London, will somewhat be linked to the South Africa business. And secondly, we are looking to create an opportunity in South Africa, in the remaining assets, to take advantage of opportunities that arise in the South African market to establish a multi-commodity business. Remember, Anglogold Ashanti used to be a division of Anglo American, and it was a specialized pure gold play. And now, with what we've done in the restructuring, we can take advantage of assets that are becoming available not only in South Africa but elsewhere in the world outside of the gold space, which we could not do previously. So these are two well-defined growth paths, if you like, far from an expression of lack of confidence in the South African mining sector. What we have created is a repositioning of the company to take advantage of the fantastic opportunities that the industry offers.
You would say it creates more value, but we are seeing this trend, Mr. Pityana, where miners are separating out their local assets. And a lot would say that this is because they're seen as risky. You have power supplies, you have labour issues. Is this not an attempt to isolate those South African assets so they can't affect the rest of the company? Is this not a form of disinvestment?
Well, we don't think that we face those kinds of challenges. We have very good relations with our workers, and we have a good engagement relations with the unions. We have differences sometimes that manifest like anywhere else in the world in strike action. Indeed, our engagement with energy suppliers have shown that we've come to the party. We've not had those sort of challenges. Indeed, there are those challenges when you look at the context of the economy overall, but they are not things that motivated our thinking to restructure. Our thinking around restructuring is opportunities ahead of us. And indeed, these cannot be downplayed in the context of South Africa. To create a multi-commodity player that will be JSE listed and continue to be secondarily listed in New York Stock Exchange, and use the fantastic platform that we have as one of the large mining multinationals of South Africa is a positive thing for South Africa. It can only be interpreted as an expression of confidence in the mining industry, and far from running away from it. You must note that this is very different from anything that you have seen so far. We are not separating from the international business that we're establishing. As I said earlier on, this will be a subsidiary of our business, where we'll be holding 65% in it. Of course, it will be run as an independent entity with a separate board that will be an independent board. We will be represented. I will serve on that board as a deputy chairman, and the CEO of Anglogold Ashanti will also be a director there. So in a way, it's very different. And if you look at other structures that have been proposed, there have been a complete separation. And this is very, very different.
I have to ask you again, because there is such a massive trend here, Mr. Pityana. So you're saying that this is not a big thumbs down for South Africa?
It's not. It certainly isn't, because if we were, I would agree with you, if we were proposing to relocate the headquarters of the holding company, Anglogold Ashanti, to another jurisdiction. We are not. The headquarters of Anglogold Ashanti will be Johannesburg. The primary listing of Anglogold Ashanti will be Johannesburg. I, as the chairman of the board of Anglogold Ashanti, will be based in South Africa. So would the CEO and the chief finance officer, etc., etc. These clearly indicate that the main base of the business will continue to be South Africa, and that's why it's important to note that we will hold 55% of the shareholding in the international business, and of course we'll probably dilute over time depending on opportunities that arise with our South Africa strategy and with the developments around that business. But clearly, this is not an outright split and divorce of the two businesses. There's two separate entities that have no relationship to one another.
Mr. Pityana, so you're being optimistic, but investors very upset today. We're talking about a rights offer as well. And I'd like to know how bad the situation is for the South African mines. We hear of these very deep mines. You can't extract the gold without full mechanization. And really that the gold miners are in trouble. What is the situation? And surely you are not very happy with your market cap being cut like it was today.
Well, the South African assets rank amongst the top. Remember that in our group, for instance, the Mponeng mine in West Wits has been one of the best producers in the group. And we have, between Mponeng and Moab, great growth opportunities. We have spoken to the new technology to go back to abandoned areas of the mines which we couldn't pursue production in because they were dangerous. But we found technology solutions to deal with those in a way that is not threatening jobs. And also there is we've recently bought Mine Waste Solution to increase our production in the area of surface mining. So the growth story around our South African assets is there for anybody to examine. Certainly, over a period of time, South Africa has moved from being the largest mining producer in the world to being number 6 or number 8 in the world. And in that context, it makes sense to look at what options are presented to us. Clearly, the negative feedback, as you suggest, from investors is something that we expected. We announced this today. We announced it as an intention, and the shareholders will have an opportunity to come back and talk to us as to whether they think this deal makes sense and they can support it. But from the initial engagements we've had with some of the shareholders, after explanation, they've understood what we're proposing and they like it very much. Of course, the proposal for a $2.1 billion rights issue is we knew would always be a big ask, but it's part of the deal. On closer examination, we have no doubt that our shareholders will understand where we're coming from in terms of the $2.1 billion rights issue that we were asking for, and we'll find each other.
Mr. Pityana, I have to stop you there, but thank you for explaining. That was Sipho Pityana from Anglogold Ashanti saying categorically that Anglogold's decision to split its South African and non-South African assets is categorically not a big thumbs down for the country.